All right, all right. I'm going to go ahead and get this started. The recording is rolling now. Again, thanks to everybody who had joined here on a Monday night. It is October 10th, 2022. So today we're going to be pretty much compiling everything that we had talked about in our previous Intro to SMC stream series, everything that we were looking at as far as that goes. Everything today is just going to come together into a concoction to look how we can enter these higher time frame trades with lower time frame entries. Now if you guys want to ask questions, feel free to either unmute your mic. If you are server muted, go ahead and let me know and I can unmute you. If you have any questions that you don't want to say or just want to type it in chat, you can go ahead and do that as well. At me anywhere, stream chat, crypto chat, stock chat, FX chat. I'll be able to go ahead and answer those for you during. We'll get into setups at the end of the stream, but right now we're just going to go ahead and jump right into it. So when we're talking about SMC, when we went over everything, I can understand that many of you, and this was the same way for myself when I first got into smart money concepts, was hearing so many terms. There's so many terms from so many different mentors, so many different people, so many different courses, anything that you might be studying, right, that tells you all of these different things. And the reason why I personally look to only understand behavior, meaning how the actual chart prints itself, how the candles are printing themselves over time, versus understanding the terms and trying to go find the terms within every single chart, right? Because the reason I say this is at the end of the day, you will still be pattern trading, quote unquote pattern trading, if you are only looking for these certain terms to pop up, right? If we don't actually understand how the candlesticks are moving, how they print, how they close, why they open, where they open, why they reacted at certain areas, all these questions that come to mind, if we don't understand the behavior of that, we're not going to find that longevity, that confidence, and that consistency that we are looking for as traders. So many of these terms that you will find within SMC, within this space, within all these different mentors, almost all of these terms point to the same behavior. They point to the same way that the chart moves. They point to the same way that the chart delivers to certain areas. So understanding that is already going to get you into a mentality to where you're actually trying to learn these candlesticks for how they open, how they close, versus trying to find a fair value gap somewhere and then saying, why didn't it work right there, right? Or something similar. We have to understand when these actions will occur, and that's going to help a lot today when we get into what we are talking about. So we're going to go ahead and start this off from just a top-down analysis perspective. Why do I do top-down analysis? Well, because your higher time frames hold the story and your lower time frames make up the story, right? So think of your higher time frames as an entire book, or the entire reasoning that a book has, the whole moral of the story. That is your higher time frame chart. Your lower time frame chart is what makes up the story. It's all the pages in between. So now if we start from our higher time frames and understand, okay, this is what we are looking for, we can start to get into those lower time frames and start to read page by page as far as how the story is setting up. I'm not sure. Can anyone else kind of go with what Ozeki is saying? He says the screen is flickering on and off. I'm not sure if it is doing that or not. It seems to be running smooth on my end. I don't know if that's happening for anyone else. All good. It might be the connection. I'm not sure. It's happening to Brayden as well. Oh, okay. Cool. All right, it may just be the connection, Ozeki, as far as how that's working. This was recorded as well and will be posted to YouTube after, so if you don't get the best quality, you will be able to get that good quality on YouTube after. So, back to what we were getting. The moral of the story, the moral of the book, right, is going to be on your higher time frames. Your lower time frames are each page in between. That's what makes it up, right? So if we start from a top-down analysis perspective, I always look at my higher time frames, my monthly, my weekly chart. I don't always look at the monthly chart. The monthly chart, I probably peep it once or twice a month if needed, right? But most of the time, I'm going to be looking at my weekly chart when I'm starting my top-down analysis. Now, this is going to give the story as far as what we are looking for, okay? So once you start on your weekly chart, then you can get that overall moral where is price drawing to? And then once you start to get where price is drawing to, now you can get to your lower time frames and understand how it's going to get there, right? So what this means is, and what SMC means is as a whole, right, is there's 90% of people, 90% of traders who get into this space and end up unprofitable. Okay, 90% of traders get into this game and end up unprofitable over the long term. So now that begs the question, what about the other 10%? How do they profit, and where does that come from, right? Obviously, there is the belief with smart money concepts that there is, in theory, one entity that controls the rest of the market, and we will be able to find that manipulation within that entity and then follow that entity. We're the small fish, right, riding the big whales as far as that goes. But understanding this means that one entity is going to hold bias opposite to retail, opposite to the uninformed liquidity. The uninformed liquidity is everyone who doesn't know where that direction is going, right? Everyone who is retail. I am a retail trader. I'm not a hedge fund. You are a retail trader. You are not a hedge fund. You do not control the chart, right? So understanding that we are also retail is also something that's very, very important with these concepts. Okay, so what this means is, and something that I want to point out with this specific chart, is the amount of retail and how quote unquote wrong they were as far as direction and the reason the chart moved to those areas. Okay, so let's just start this out from a top-down analysis perspective from our higher time frames. On the weekly chart, this was your most recent low that caused this recent high. Why do I choose this low? This is something that's very important as well. Well, you had your liquidity rate to the downside. Here's an internal, remember this is your weekly chart, internal break of structure to the downside just to bring us to these lows right here. And then we broke structure to the upside. So this is my most recent area of demand within discount of this low to this high right here. So this was the demand zone I had chosen at the point in time. I believe we were around these areas right here when I looked for this demand zone, and I'll tell you why. Let's just bring this into replay mode so we don't see actually what happens around these areas, but we can understand. Okay, so from this low to this high right here, we must understand premium and discount as far as Wyckoff goes. Also something that we are adding in to our analysis. So I have this low here, I have this high here. I'm looking to sell in discount if I can see supply, right? And I'm looking to buy in premium. Overall, this is a very bullish chart, right? But we must understand when these pullbacks are going to occur and why they're going to occur. We talk about Wyckoff, and what do we say about distribution? We say we're looking for the manipulation of highs while we leave lows within premium of our trend, okay? So this is the premium of our trend, this 50% here. And can you see how we barely came down below these this premium, this 50% down here and down here, but we were maintaining that equilibrium, and then we saw that move back into premium, taking out all of these highs right here. That's what's very, very, very important. All of these relatively equal highs that we can see right here are retail in the form of stop losses, okay? So anyone who got into shorts on these moves down to the downside right here, right here, right here, maybe shorted right here, where are they going to place their stop losses if they don't want to be wrong? All right, let's just say you got in a short right here. Put a stop loss right here. Maybe you get stopped out, put out the next candle, next candle, next candle. Maybe you didn't get stopped out there. Next candle, right? Retail doesn't want to be wrong. With the mentality that they have, they do not want to be wrong based on what the chart is telling them. But we can understand that being wrong is a good thing when we are looking to take these trades. And we'll talk about what that means over here in just a second, okay? So retail shorting, retail shorting, retail shorting, retail shorting. They're trying to take it to the downside, whatever it is, because of gravity. Maybe they think, right? Maybe they had a breakdown, whatever it is. I'm not completely sure. But we can tell from the chart right here that their liquidity rests at these highs right here, at these highs, at these highs, at these highs. And we had an internal break of structure to the downside, okay? So we introduced supply on our first institutional candle to the upside right here. After we introduce supply right here, we look for the confirmation of the supply. So now we'll look for price to come back into the IC we'll look for a break of structure to the downside, and that will now confirm our overall bearish bias, even though retail at these levels, at these levels, maybe they have a flip zone, are trying to buy to continuously take it higher, because what do they see? Even from a quote-unquote market structure smart money perspective, what could they see right here? Higher high, higher low, and they want to see continuation, right? They're like, it's bullish, it's bullish, it's bullish. But we now understand what is happening within premium of this trend right here. We had come back into premium, we had taken out highs, and look at all of these lows we are leaving, and we are breaking structure to the downside. That tells me that we're introducing supply and we're not introducing demand. This was just a move up to liquidate these highs right here, and we'll talk about what happens at these areas as well. Let's say you did have demand at these areas, right? This is a weekly chart. We broke structure to the upside right here. So within this area is an area of possible demand, right? We could see some type of demand within this area. But now, if I take it down to a 3-day chart or a 2-day chart, that candle, right? The one right before we had that break of structure to the upside that took us out of this high right here that had caused an internal low was over here. A demand zone that we had over here, right? I'll show it back on the weekly chart as well. This demand candle right here. Okay, so this is an area that I would have looked to buy if I was trying to take buys. But let's talk about what happens after. Remember, we're still in premium. Okay, liquidity has been taken out now. Now that the liquidity has been taken out, the algorithms are able to now enter those short positions because there's more liquidity into the market, so they can now pump in their bigger positions, right? And now that that occurs, we have an area of possible demand. This was the low that had caused this high right here. Now let's watch what happens next. I'm just going to go ahead and play one down. We see that break of structure to the downside. This is where my break of structure is. Many are looking at it from this area, right? Which is a swing low, also an area to break structure, but this is where the institutional liquidity entered to break structure to the downside. So if I wanted to look for trades, now that I have, right, confirmation of that break of structure to the downside right here, and I've been disproved on my longs to the upside right here, where can I look to take entries? Candle before candle that broke structure to the downside with displacement. There it is. Right? There's the fair value gap as well, the area of imbalance that is now leaving or left behind into these areas. So now that I have a weekly break of structure to the downside, I can look for confirmation of that on lower time frames, and I can look to take it back into discount, into demand of this low here that had caused this high. So overall, we could be looking at something like this, right, where we caused this high, came back down, made a higher low, continued to the upside, or we could be looking at this demand as an area to push back into supply to continue downside, right? We must understand the multiple possibilities that can come into play as well. But this is the area that I believe price was drawing to due to all of these equal lows that we can see right here. The break of structure to the downside. It's also in discount, right? We can see multiple things coming into play. There's also a weekly imbalance just before the zone, right? Everything that we need is coming into play. Okay, so now that we have that break of structure to the downside right here with displacement, we can look for the confirmation and then the delivery into these lows right here. Let's just play out a few more candles and see how it reacts to that zone. It comes up into that zone. We start to see a wick down, and then following, let's just go ahead and play it out a little bit more. Play out a few more candles, we get the continuation to the downside. Now I have the swing low that is broken. Now I'm really looking for price to draw into this area of demand, while retail is looking for longs. Remember, we marked out this zone right here. Look at that. That's retail trying to take longs to the upside. But what happens instead? We can see equal lows that are formed. It comes down and creates equal lows. So now retail trying to take these longs to the upside, and we'll put this out just right here, long position, right, with stops underneath these lows, trying to take it to these highs right here or wherever they're looking to take it. Now that their stop losses are underneath these lows, it is now the fuel. It is now the reason that price can move so quickly within these areas. Now that they have placed their liquidity here, where is it drawing to? Liquidity to the downside, even though they're looking for upside based on this one impulsive move to the upside right here. There's no confirmation of that on lower time frames, right? Now we have another swing low. We have a swing low breakdown. We have a candle before that candle. I can go ahead and look at my daily now. As daily structure was bullish at this point in time, we can see this high here, this low here. I'm going to go ahead and delete this. Right, and we see that move to the upside right here of an internal high that had caused a new low, and then we see the breakdown. So now we have a daily breakdown. Now your weekly and your daily are in place. So now we see that move following that market structure shift from bullish to then bearish. Now the weekly and the daily are in place. I have a daily candle before candle that broke structure to the downside of this swing low with displacement. We can look for a price to maybe mitigate one of these areas, maybe take some lows right here, and then start its pullback into this area right here. I'm not worried about longs because they are not coming to play. The only thing that is showing right now is shorts, right? So we now must understand what could happen at these areas. We're looking for price to come into it and then break structure to the downside with displacement. I can now look for lower time frame entries once that comes into play, right? So we'll play it out a little bit more. We'll watch the daily chart as we come down, take out these lows right here, starting to create some more liquidity. Look, more relatively equal lows right here and right here. And if we wanted to do premium and discount of this swing move as well, we can. So let's go ahead and draw this high to this low. We'll flip it real quick. Won't let me flip it. We'll do it the other way. No worries. Draw it from this high right here to visually show our premium and discount. Now we are back into premium and discount of this swing move right here. We're looking for price to mitigate this area, break structure to the downside, so we can then look for those lower time frame entries. Price comes into that area. We see the wick up into the zone. We can look on the 12-hour chart, even the 4-hour chart for the reaction once we come into this zone right here. And we're now looking for that breakdown. We're looking for the same behavior that we saw right here. We're looking for the same behavior that we saw over here. Same exact thing over and over again from higher time frames to now lower time frames. And then we are looking for delivery into this weekly area of demand right here. Imbalance in discount of that low that had caused that high on the monthly chart that we had talked about. So now that we are within this area, we're starting to manipulate highs. We're leaving lows. Again, we are in premium again. Everything that we want to see coming into play. Everything is checking the box, checking the list. Let's play out a few more. Do we get that breaker structure to the downside with displacement? Yes, we do. We now have areas we can look to enter, right? So now that we have our 4-hour breaker structure to the downside, my weekly, my daily, and my 4-hour is now within play. I'm now looking for that full move, that full expansion into these lows right here. So now we can go to a lower time frame chart and look at what had happened right here. I can even show the 4-hour within these areas as well. Let's bring that back. Play out a few more candles. There's our 4-hour breaker structure to the downside right here. We have a 4-hour supply zone. We can look for lower time frames, look for the hourly shift. After mitigating this area of supply, taking out these highs right here. Again, retail is trying to buy. They're trying to take this to the upside. What do they see at this point in time? Let's think about what retail is looking for. Breakout. They see a breakout, right? They're trying to take it higher. This is shown on every single chart at this point in time, right? We showed the higher time frame chart. We can go back to the daily. Same exact thing right here. What do they see on this move to the upside right here? Even though we're coming back into premium, mitigating supply of our recent move to the downside. Another breakout. Where is retail placing their stop losses? At these lows, at these lows, at these lows, and at this swing low, because they don't want to be wrong. They want to find the right trade. They want to catch the bottom, right? And they want to take this all the way to these highs right here. That's that retail mentality. They want the bottom, they want the top, okay? But they're never going to find that because they're entering on bearish candles to the downside to take it to the downside, and they're entering on bullish candles to the upside to take it to the upside. We're looking for price to come back into areas of discount or back into areas of premium with our supply and demand to look to enter trades. So now we have all time frames coming into occurrence. We can go back to the hourly chart, look at what happens when we get into these areas. Let's play it out a little bit more. We come back in, tap into that, and then we see a move to the downside. We see that 15-minute break of structure with displacement to the downside. I now have areas of supply, areas of fair value as well. I can look to enter these trades on. And then we can see that full continuation following. Now again, still looking for delivery into these lows. Now I have the weekly, daily, 4-hour, hourly, 15-minute all into play, okay? So the first area that we could look to take this to would be areas around here, would be areas around here. Why do I say this? Because this was the low that had caused this high right here. Obviously, it did not make a new high, so we are looking for delivery into this low right here. But on lower time frames, I can take profit at areas of imbalance where they could possibly reverse within discount, okay? So now that the trade is entered, we can even look at more areas for more entries, but we will talk about the delivery with this move right here. Price starts to play out. We start to get that drop to the downside. We can go to an hourly chart to see what happens within these areas. But again, let's talk about the retail mentality. What are they looking for at these lows? Maybe they like institutional candle, demand zone, whatever it is. They're trying to find reason for price to come to the upside when overall it's still bearish. It's still going to deliver into those weekly and those monthly lows that we have talked about since literally July, right? So move to the downside, move to the upside. They're like, this low caused this high right here, so we must be able to come into this low right here and deliver into this weak high right here. When overall, we're still bearish. We're still looking for that move to the downside. So now that they have placed that move right here, and they've placed their stop losses under this low, under this low, under this low, right? Under this low right here, this low right here. We now see that delivery as they're the reason for price to continue to the downside. So let's go ahead and play it out some more. Now what do we get? That move to the downside. They're the reason that price is moving. Now we can talk about it some more, right? We'll wait for a higher time frame switch again. We can look for a 4-hour again as we deliver down into these lows right here, because we can see the buy side liquidity as we are moving down as well. The clean equal highs within this area of premium that we are still looking for. We got another breakdown to the downside right here. Here's your M, your market maker M. You had your first break of structure to the downside right here of this range. You get the confirmation of that on this move candle before, right? Was lying right here. Everything we're looking for coming into play. Let's go ahead and watch where price moves now. We'll play out a few more candles, and we see that delivery into those imbalances. So if I was on lower time frames and I was happy with this R at these areas, 78R, very, very, very happy at these areas, we can look to enter. Or we can look to trim at those areas. Now that you have trimmed within those areas, we can now look to hold for the entire narrative. But let's talk about some other entries as this is coming into play as well. We'll look for the 4-hour to switch and show that same exact thing. Now that we have that, we're looking for the delivery up into this area of supply. So all of retail trying to now short to the downside because they were wrong right here, right at these lows. Now it's broken down, so they're like, okay, I'm going to flip my bias. I'm going to short it. I'm going to put my stop loss at these highs right here. I'm going to put my stop loss at these highs right here. They start to do that. If they flip their bias, price starts to reverse on them. So what are they doing at this point in time? Flipping again. They're trying to long it. They're creating more equal lows within these areas as well. So now that we have that full confirmation of that zone, we can look for price to switch to do the same exact thing. Coming back into premium of now this high that caused this low right here. Let's go ahead and play it out. We come up into those areas. We're looking for a break of structure to the downside with displacement. The same action we are looking for here. We're looking for the same exact thing over here. Let's bring this in, zoom it in. Where do we get that break of structure to the downside? Look at this. Here's your double MB again. Now that we have that break of structure to the downside, more entries are now appearing, right, on lower time frames. And let's talk about what happened within this area now that I have that area of supply. We get that break of structure to the downside. Again, that M is presented itself. Same exact thing we're looking for on higher time frames. And then we're looking for delivery into areas of supply, into this fair value gap. It's supposed to be drawn like this institutional candle here. For the delivery lower, more lower time frame entries that could have been found within this move right here as well. But we now see how over and over again retail is trying to take it to the upside. They're trying to take it to the upside over here, right? They thought that was demand. They thought it was going to go higher. They thought it was going to go past this high right here. But overall, we were still looking for downside. And this is something that can be shown on literally any time frame, meaning I can go to the FX sentiment and go back to this date and look at retail and look at how many people were long, and it will show you 80%. 80% of retail, 80% of everyone who was trading XAU was long at these areas. They were long at these areas. They were long at these areas. They were trying to continuously take it to the upside. And now that that has occurred, and now that that entry is given, we're holding for the entire narrative, which is into these lows right here. And that's how these super high R, 229, whatever it is, 150, 100 plus R&R trades come into play. It's just lower time frame confirmations with a weekly and a monthly bias. That is all it is. So now that we have that confirmation of these zones right here, we get a break a structure to the downside right here. We can see another area of supply, another break of structure to the downside, drop, base, drop, another area of supply, continuously looking to take it lower and lower and lower until we are disproven into this weekly area of demand. So we had caught entries above within premium, taking it into discount of this entire swing move right here. So as far as the importance of what we are looking for and how simplistic it is, it's the same thing over and over and over and over again, okay? It's literally market structure, supply and demand, and Wyckoff, which at the end of the day is just Wyckoff. It's all manipulation concepts. It's waiting for the manipulation within extreme zones, finding your overall narrative, and then using your lower time frames as the pages to then get up into that point in time to where you can enter those trades, walk away from those trades. I believe this was a month hold. Hold for a month and be completely fine. Make a ton of profits. The amount of profitability that is coming within these setups is huge, and you don't have to swing. That's another thing as well. You do not have to swing these setups. I personally like to swing because that's why I look for my R&R as far as these higher time frame setups. On lower time frames, or if you don't like to swing, if you don't like to hold for very much, you can find the same exact narrative. Instead of using a weekly, I'm now using a daily chart and using 1 hour confirmations. Or instead of using that, I'm using a 1 hour chart and using 5-minute confirmations, right? We can now start to see how this can come into play for every type of an analyst, every type of trader, whether you're a swing trader, whether you're a scalp trader, whether you like intraday moves more, whether you're a position trader holding for months at a time, right? Same exact narrative, same exact story. We can see how instead of demand that we had introduced over and over again, it was supply within premium coming down into these lows. And that's how retail is constantly manipulated. We showed the breakouts, right? I could maybe even throw on an EMA. We can see that as well. Moves to the upside. They're like, it's coming down, it's bouncing into the EMA, so I'm going to take it to the upside, right? This is our daily chart. We can go to a weekly chart. Look at the EMA here as well. Look at where retail is buying and look at where demand actually is. Retail buys at these areas right here. Price comes to the upside. They're like, okay, I'm good to go. Maybe they're buying even more because they're like, okay, it's showing this good move off of this 200 EMA right here. And instead, it just breaks down and continues to the downside because these lows right here is the liquidity. That is the reason price is moving to the downside. Their stop losses are what the algorithm and the institutions are seeking. So very, very, very important as far as how these all come into play, how we can look to get these trades, and how we are maintaining within the same bias. We talked about the demand zone up here getting violated to the downside right here. There's that displacement candle, comes into the candle before, break structure to the downside again. There's your candle before candle that left that area of imbalance. We can see it came into that as well. Reacted off very, very nicely. And now we can see which zones are going to be held and which zones aren't going to be held as far as how you can look to take these trades and to hold these trades. So I'm going to go ahead and take off this EMA right here. See the demand zone as well. I hope that helped you guys out as far as the retail versus institutional perspective, as far as what they are looking for and as far as how they are the reason that the charts move the way they do. As 90% of people being wrong in a market that is supply and demand, for every buyer there's a seller, right? For the higher time frame and the institutional perspective who doesn't hold that seller, they're looking to manipulate price into retail liquidity. So now that we saw how that play came into effect, how we could have looked to enter that trade at that point in time, we can now see the same exact thing on the opposite side, how the disapproval theory can now come into play as well. So here's our daily chart. We can look for areas of supply to then take it to the downside again, but let's go ahead and play out a candle here and talk about what had happened. We saw price come into there, but did we see that area of displacement? And I'll go ahead and show lower time frames as well. Did we see that displacement? And I'll go ahead and play it out. Don't know why it's showing me all of that, but we'll just look at this side of the chart right here. Did we see that displacement break a structure to the downside of a low that had caused a new high? No, we did not. We didn't see a break of structure to the downside right here. No breaks of structures to the downside right here as we came into this area of supply. So now I'm starting to be disproved in my theory. We can go to lower time frames and talk about the reaccumulation that had occurred within these areas. So we had a 4-hour break of structure to the upside, 4-hour double break of structure to the upside that now has an introduction of demand. And now we can look for a possible reaccumulation, and we'll talk about why we're looking for reaccumulation within these areas. Did we get that displacement break of structure to the downside? No, we did not. Instead, it just liquidated these lows and then showed that break of structure to the upside, right? Liquidated these lows right here. This was our first liquidation. This is your low that had caused this high right here. So if I want to go ahead and draw out my range, I can do that as well. And where were we within the range? We talked about Wyckoff, we talked about premium and discount. We were within discount of this swing move right here. This low that had caused this new high. We came up into premium, came down, made a move. All right, we could even do it like this. Came up into premium, came down, came out of the range right here, and then made that move to the downside. This candle right here is now getting everybody to short. Everybody wants to take this to the downside. So where are they placing their stop losses once they're finding this short? At these highs. And let's look left. More equal highs. More equal highs, more relatively equal highs, right? We can now see the reason why price is continuing as quickly as it did. We could even put it up here, right? And they're like, oh, we saw this long move to the upside right here. I'm going to put it at the next high. I should be fine, right? Nope. Let's put it at the next high. Okay, maybe I should be fine here. But then at this point in time, blown account, right? Blown portfolio. Happens over and over and over again, just giving liquidity to the market. But instead, now that I have that break of structure, that double break of structure to the upside, introduction of demand, I can look for areas that I can instead buy instead of looking to take it to the downside, right? We see this high right here. This high is broken to the upside right here with this candle. We see this candle deliver back into that right here, and then we see the continuation following. Areas of fair value could have looked to enter on this Tokyo liquidity rate to the downside as well, and then look to take it to the upside. So I was disproved on taking shorts to the downside over here. Now that I'm disproved, I'm looking for continuation of this break of structure to the upside over here. Now that that has been given, we can see price manipulating these lows, taking out lows for the introduction of new demand. Now that it is taking out these lows, taking out this liquidity, now that retail is deciding I'm going to go short, now we go long. That's how it's going to work every single time on every single chart that is manipulated with a lot of liquidity in it, meaning it's not a meme coin or something that somebody with $2 million, $3 million can place it in there and move the chart by 5 to 10%. Okay, something that has a lot of general liquidity in it, something that is manipulated on a different level, something we can look to trade. So break of structure to the upside right here. As long as it holds this low that had caused this high, we can see continuation into the weak high. So instead of looking at this as a strong high, I'm looking at this as a weak high. We come down into this area. We're creating a lot of buy-side liquidity. We can see all the buy-side liquidity we create, and then we get that continuation to the upside. Something too from a retail perspective, just to state it, all trend lines are literally liquidity. The trend lines that you draw are liquidity. Whenever you see a bull flag or something similar, right, we'll just draw it out like this. We see large moves up, maybe a rally-based rally. We get a move like this, and we start to see what could be a possible another rally-based rally, right? And retail starts to say, okay, maybe this is a bull flag, maybe this is a bear flag. So they start to draw out their trend lines as far as what they're looking for. They draw out something like this. and they draw out something like this. And actually, this is a pretty bad example as far as this move right here. But we'll just draw out a little flag. I'm going to go ahead and delete this and put this out again. But we get a large run up, and then we get that flag, right? And retail is buying the bottom, shorting the top, buying the bottom, shorting the top, buying the bottom, shorting the top, buying the bottom, shorting the top. So all of their liquidity is going to be at these highs for shorts, and all of their liquidity is going to be at these lows for longs. So now that we see a move to the downside, and this is what happens on every type of retail bull flag pattern, they get their move to the downside, they start to short this, and instead what does it do? Introduce demand and continue to the upside. Because we came back down within discount of this impulsive move right here. We took out all the early longs and we introduced demand. So instead of looking to play your trend lines as, oh, this is going to hold or this isn't going to hold, I'm now focused on what the chart is doing instead of trying to find a zone and seeing if it's going to hold or not. Because every time I'm placing, or they're placing their stop losses at these lows, now that the liquidity has been opened up into the market, we can look for that lower time frame shift to the upside to now tell us demand has been introduced. Now I'm now looking for trades right here to take to the upside instead of trying to long right here or long right here or long right here or long right here for it to break out, right? We see this same exact thing happen right here as well, where we see a move like this, and then we see price come up into these areas instead and hold these lows, and then it breaks structure to the downside, and then we see something similar to this, where it comes up, breaks structure to the downside, and we see continuation to the downside. Now we have a distribution, right? As this was a break of structure, price came up and then broke structure over here, introduced supply instead, right, of introducing demand. So this was how we'll be able to tell what type of side we are on as far as what we are looking for. Another good little retail thing I can show you from this perspective right here. Your accumulations, your manipulation of lows while we leave equal highs could be a retail cup and handle, right? Maybe from this high, we'll do it from this high right here. This side to this high, right? You got your cup and then you got your handle. Price comes down, retest that, and continues to the upside. When actuality, it's an accumulation, right? We can now start to see those retail patterns and start to see why they actually make sense and why they actually work on that day-to-day basis. Head and shoulders is just a distribution. You could have called this, I don't know if you would have called this a head and shoulders or not, but it's just a distribution. As price runs up and it takes out the highs, right? Creates that rally-based rally, comes up, it takes out the highs as well. And then we see that distribution play out. It comes down into these areas, accumulates, and then distributes. Now you have your retail, right? Head and shoulders. When all actuality, all it did was just distribute at these highs right here and then create new supply from accumulation to then distribution and continuation to the downside. All of these retail patterns are from an institutional perspective. So instead of just trying to find a head and shoulders, right, and then trying to short it to the downside, what if instead I was looking for this move to the upside right here? This wasn't a distribution, right? Price was coming down and making more buy-side liquidity, so we saw a lot of equal highs presented at these areas, and it still held this low, came into these areas right here, and then broke structure to the upside. I now have an area of demand. I can look to take this trade to the upside. So now instead of trying to play it off of a head and shoulders, I'm still following that directional path. I can take it to these highs right here as my next area of liquidity, when overall, higher high, higher low, continuation to the upside. We'll draw this out in a different color as well, a red. So all it did was just create a higher high, higher low, continuation. We looked for the confirmation to then take it to the upside. This is the theory. This is what has happening within. And I'll go ahead and take these off. It is a little bit messy, but very, very simple, very, very clean as far as how institutional perspectives work and why these areas of retail are manipulated. So we're going to go ahead and take this off now. I'll do some gold TA on what we are looking for as far as the week. and then we will talk about a little bit of Bitcoin and ETH as well. But your continuation theory and your disapproval theory are going to be huge with smart money concepts as far as how we can simplify it instead of looking for every single rally-based rally, every single drop-based drop, and trying to trade every single one. Premium and discount as well are going to be very, very, very important. So I'll go ahead and play this out to where it is right now. Take off replay mode. We'll talk about what we are looking for within these areas right here. And we could even talk about this short right here. I believe it was last Thursday. Yeah, we were within these areas, and we were talking about how this short was able to pass my phase one at these areas right here on a 27-1 on this move. But do I need to catch the absolute top? No, I do not. And let's talk about why this is important. Because here, down at these lows that we are at currently, I pulled a 90-1 on this trade right here. But let's wait for the whole range breakdown. Let's wait for the confirmation, the M, right? We came down, broke down once, came up, reacted to supply, broke structure to the downside with displacement. Now we have that area of fair value as well as that institutional candle just before, right? That candle before candle that broke structure to the downside. Now that we come into those areas, one impulse can change exactly what we are looking for, meaning a lower time frame impulse can now call the entire move. Now that we have that entire range break to the downside, we came into that hourly fair value gap, and let's just throw on replay mode. Actually, we'll bring it back a little bit more, and we'll talk about what I was looking for as we came into these areas. If trading view is not going to be slow, just a little bit more candles now. Okay, I don't know why it's showing me that now. Let's go to trading view. This is okay. There we go. Perfect. So 5-minute chart, right? Price was driving into this area of fair value, into premium of this that had caused this low right here. Again, same exact thing after we got the entire full range breakdown. So even after this trade, even after this trade that was given as well, we can look for this one, right? Now that we have the entire full range breakdown, to keep it simple and to keep it easy to catch these continuations over the reversals, right? So now that price is coming up into this area, I was looking at the 1-minute chart, was waiting for price to come in and fill the 50%. Let's go ahead and play it out. As it's doing it, remember the behavior as it is coming up into those areas is very important. We can see we're creating trendline liquidity on the move to the upside right here. And this is where I was very interested because I saw this one move into this fair value gap right here. I'll play out a few more. All right, we got one impulse right here. I saw price come down one more time. Let's play it out. Price comes down and then makes the second impulse. So at this point in time, I was watching price move up into these areas, and I was telling myself, okay, this is a possible 3 drives distribution into the 50% of this fair value gap. And let's bring this back. At this high right here, if it is going to allow me, perfect. Go to the 5-second chart actually. But we had one impulse right here, 2 impulses. I was looking for the third impulse and then the breakdown to the downside following. We get the third impulse, the move to take the highs. We filled the 50% of the fair value gap. And then I was actually on the 1 second at this point in time. I don't know if it'll bring me all the way back, but we had an institutional candle that was created on this move to the upside right here. We can see price came back into that area of institution and then showed that delivery off of that. Now that I have the entire range break confirmation to the downside, a 1 second impulse, 1 second break of structure to the downside within premium is now going to bring that entire move. So let's go ahead and play it out now. See price comes back into that, creates an accumulation to then distribution, and then drops off after. So all I did was wait for the continuation, and then I was able to find that lower time frame entry I was looking for. But let's bring this back to an hourly chart. And you might be saying, well, why is he showing me this? Why is he showing the seconds? Why is this play right here important? And let's bring this out. Well, I had a 90-1 over here, catching the quote-unquote top, 111, waiting for confirmation, half the time. Let's go ahead and bring that out as well. 2 days, 23 hours. Let's start it from over here. If I were to hold this one, this trade right here, 4 days and 9 hours. Oh, but you caught the top. But I profited more on this one in half the time. Now we understand why continuation is a lot better, why I'm looking for continuation trades over these trades, over the tops, over the bottoms, right? Because I have to risk more on these trades than I do on these trades. Now on these impulsive moves to the downside, right? So that's all it is. Just by waiting, just by showing that patience and looking for my areas of supply and demand, looking to take certain trades to certain levels. Now that I have the full range break confirmation, something very, very, very obvious. This was after that 830, I believe this was, I don't know if it might have been CPI on this move to the downside right here, or unemployment, not completely sure on what it was, but we came up into this area. We had this breakdown right here. I said accumulation to the distribution. Following our distribution, we saw right here, again, that LPSY from a Wyckoff perspective, but on our lower time frame impulse to the downside, we were able to take entry and able to profit exactly more actually what we profited on this trade right here, just by utilizing patience. So allowing everything to come into play and waiting for a range break is going to teach you so much instead of trying to catch those tops and those bottoms when it comes to smart money perspectives. This was something I really, really, really wanted to emphasize today as far as these continuation trades over the reversal trades, because at the end of the day as well, the market is 80% continuations, 20% reversals. Obviously that could be argued if you're only trading lower time frames, but on higher time frames it will always be 80% continuations and 20% reversals as far as what we are looking for. So stop trying to catch those tops, catch those continuations, because these you will profit much more, much quicker than you will on these trades right here. Soon you'll be able to get to this point, right? But at the end of the day, and you'll have 1, 2, 3, 4, 5 entries within this move right here, instead of just the one entry at the very end. But allowing that confirmation to come into play is going to bring you so much more profitability than you even know, as well as learning ability, because now you're waiting for the entire range to play out. You're waiting for price to show you if it was an actual accumulation or an actual distribution. And now you have that ability to profit on that move, right? If we were waiting for this move right here, instead of trying to catch this bottom right here or catch this move right here, instead of have another break of structure to the upside, I can wait for the reaccumulation. Now that the reaccumulation is being shown, now that I have a break right here, I have a candle before candle, I can look to play it on right here. I can risk a lot less on this move than I can on this zone right here. That's all it is at the end of the day. I'm looking for continuations over reversals, as they're going to show much more profitability. So with that being said, I do want to get into XAU now as far as what we're looking for the week. I'm going to go ahead and throw in my session times for last Monday's low, which came right here. Tokyo Monday, our lows were right here. I am looking for distribution into these lows, continuation lower into these lows right here. I do believe people are buying this demand zone right here, which is completely fine for a reaccumulation overall. I'm looking for these lows to be taken out, looking for a break of structure to the upside with impulse. Once that is given, I will look to take long entries up into these weak highs right here. First TP is going to be probably on the hourly chart on the most recent weak high that we have made. So after we get this impulsive move to the upside right here, and the entry is presented over here, first TP is going to be at these highs as they come into play. Second TP we can hold for the overall higher time frame as far as that goes. But what this is going to do now as well for structural liquidity take profits is going to help you not get into the mindset of I have to hold to this high right here. And the reason I say that is because you have your impulse, you have your area of supply and demand, and you have your entry. Now you can take it to your most recent structural liquidity take profit, which is going to be that first weak high that was created right here. Now that that weak high is taken out, we can look for continuation, or you can get into areas like this where price comes up, takes out this high, mitigates some area of supply, and continues to the downside, right? Was I right on this trade to the upside? No. Was I able to profit still? Yes. That's where it's going to come into play, to where now you don't have to know what is going on. You don't have to know that this high is going to get taken out up here. All you need to do is play your most recent structure as far as how it is forming, and you'll still be able to profit on these moves, right? So patience, patience, patience as far as what we are looking for. If you're trying to get lower time frame entries, trying to scalp, you can do the same exact thing with an hourly chart, right? And using 15 minute to 5 minute confirmations on lower time frames if you're playing sessions, whatever it is, right? But from a smart money perspective, and I literally preach this every single time, it's going to be a lot of repetition. Now that you have that information, that general information given to you as far as where you are looking to take certain prices, you can now get into when. Okay, so now that you have that, you can fit this around your lifestyle. You can go make it a job. You can come to the charts at the same exact time every single day and not spend 8 hours on the charts a day, because all that's going to do is just get you into the mindset to where you're coming up with stories and plays and setups that just simply aren't there. And then you get frustrated and you think it's your strategy. So you go find somebody else, go look for a different mentor. And then what does that mentor tell you? The same exact thing. And now you're like, well, I'm frustrated. It's not moving the way it should be moving. And now all of a sudden, instead of focusing on yourself and your mentality when you are looking at the charts, how you are making decisions, you're focusing on the strategy. When at the end of the day, it is you. It is how you trade. It is the trader, not the strategy, right? Because you see people with retail strategies all the time. There's funded quote unquote retail strategies that are out there using 200 EMAs, using 50 EMAs, using support and resistance, right? Using price levels. Yes, they may take more losses, but if they're still profitable at the end of the day, it's because they took something, they worked on one thing and one thing only, honed it down, found session times, came to the charts at the same exact day or same exact time every single day, right? And was able to make it into a job, and they were able to manage risk, right? Based off of whatever it was. And they were able to still profit because they found their system, they honed in on their system, they didn't stray away from that system, and they said, okay, it is psychological, I'm going to work on my mentality. And then once they worked on their mentality, they were able to hold to those take profits and able to take those trades and able to get stopped out and not worry about it, right? Because losses will occur, and losses are going to be those lessons. And I don't want you to go out and be like, well, I lost because my strategy is wrong. At the end of the day, that lesson that it's going to teach you is almost always going to be either one of FOMO, either one of FUD, either one of fear of losing, either one of fear of leaving money on the table. At the end of the day, it's going to stem back to that psychological analysis, okay? So very, 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 very important as far as smart money concepts, as far as these institutional concepts. I will be repeating myself pretty much all the time, and that's why we ended this one with the finale, because there's nothing more to show you. The markets have been moving this way since the 1900s, since the 1800s, since the Great Depression. And Richard D. Wyckoff shorted the entire market the whole time, right? Richard D. Wyckoff was the one who said, okay, the Great Depression has started, and the charts are telling me that the whales, or the quote-unquote composite operator, are distributing at the top. So he then shorted the market, took it all the way down, while 90% was struggling. They were poor. They couldn't find jobs. They couldn't find houses. They lost all their money in stocks, right? But there's that 10%, again, who profited off of the Great Depression, off of that drop to the downside, when all of a sudden it was just a catalyst, right? So now we can understand how the markets move, why the markets move. They're moving to that retail liquidity, to that 90%, into those areas. So instead of trying to get the right direction all the time, really try to focus on your system, try to go back test it, try to go find areas that you would win and lose, right? When you're back testing, think about it as it was live. How would I be thinking within these areas right here? Would I take this trade to the upside, or would I not take it to the upside? A lot of the times when I first got into these smart money concepts, I would ask myself, well, if I was retail, would I try to take this trade to the upside, right? Would I try to take this chart to the upside? And I would say, well, yes, I could. From an institutional perspective, we're in premium, breaking structure to the downside. So you know what? I'm going to go ahead and take this short, and I'm going to hold it to these lows right here. And what do we get? The short delivery into those lows. So keep it simple. I know it's easier said than done, but at the end of the day, behavior, how the candlesticks move, why they move within certain areas, is going to be the most important part of your studies, of your analysis. And then obviously the mental part is going to be the most important part as well. So with that being said, again, I'm still looking for reaccumulation if we can come down and grab this Monday's low on XAU USD. I've actually really been only focusing XAU USD for the past couple weeks now, past couple months. As ETH and Bitcoin aren't really making their moves. We talked about 3 months ago how Bitcoin, we're still looking for delivery into these monthly lows. We talked about it back here. We talked about it back here. We talked about it over here. We talked about it on this breaker structure to the downside here for delivery into these lows overall from this low that we created. We can show it back on the monthly chart again. These monthly equal lows, as well as this monthly fair value gap that we have right here. Now, I believe personally when we have this move to the downside right here, retail is going to say short 10K, 10K, 12K, whatever it is, and the price is going to come down, liquidate these lows right here, and then start its move to the upside after. Personally, what I'm looking for Bitcoin, nothing has changed. Again, as far as the whole cryptocurrency space, still looking for delivery to the downside. We talked about this trend line liquidity as well. We saw a break of structure to the downside. We're looking for delivery into this 2-day fair value gap for Ethereum. It's going to help with the Bitcoin bias as well. But for XAU, I am looking for price to come down, grab this Monday's low right here, maybe mitigate areas of demand right here, but I'll be looking for more introduction for then the continuation to the upside into these highs right here, into this area of supply from this breakdown right here. We can see all the buy side liquidity we have on this move right here. We'll look for that delivery if it is given to us. Entries and exits will be called. It will most likely hit during Wednesday or Thursday. Thursday, we do have CPI. There's a lot of news this week. So if you guys are trying to find bias or are struggling to find bias, wait for that news field to come into play, wait for that larger break of structure with displacement, and then you can look to enter trades as far as that goes. Wait till it's obvious, make it simple, because that's going to help so much with your learning. But with that being said, those were my sentiments as far as the week. I am going to post a little bit more detailed sentiments on price levels and what we are looking for at those certain levels as well after I'm finished with this, but we are going to go ahead and wrap it up here. I'm going to give 3 to 4 minutes. If anyone has any questions or anything like that they want me to look over, maybe a chart or something similar, I can go ahead and look over that for you right now. Go ahead and check. I don't think I see any in crypto chart, FX chat, none in the stream chat either. So I am going to go ahead and end this here today, but I do hope you guys had a beautiful understanding as far as what we were looking for. Yeah, I'll go ahead and take a look at UJ here in a second, MILF. But I hope this helped with the understanding as far as how you can look to enter trades and stay on the right side of the chart over and over and over again. We might have gone through it quickly and it might have seemed like a lot, but go back through those intro to SMC classes. It'll all start to come together. Now that you've seen this last one, it should make sense, right? It should all start to come together. So I'm going to go ahead and take a look at UJ now. We get on the red list. To the FXCM chart. But as far as this one, it does look like this high is going to get taken out here. We came down, broke structure to the upside right here, came back into discount, took out these lows right here. We showed one move to the upside right here, a second on this reaccumulation from this move here. Now this is where it gets very interesting as far as our higher time frames, because we could easily, and that's what it looks like right here, reaching to take out this high right here, possibly mitigate these areas and show a possible break of structure to the downside. We'll look for areas of discount we could then take price into for a continuation to the upside overall. But on the monthly and the weekly chart, I do believe we are drawing into these highs right here. Structure is still showing pretty bullish on almost every single time frame. Monthly chart, weekly chart, daily chart, still bullish. So until it has that switch from a daily chart, a break of structure to the downside with displacement, something similar to this, but you want a closure, then we'll look for the continuation to the downside or a possible reversal. But right now, I'm still looking for upside continuation, still looking for delivery into these highs and then those monthly highs that I was looking at before. But yeah, that's all it is. Same thing over and over again. Looking for premium, looking for discount, on these moves to the upside and the downside, waiting till they fit all of your rules, fit your entire narrative. No problem, brother, no problem. But if you don't wait for them to fit your narrative and you don't take it step by step as far as what you are looking for, then you will get frustrated. You will find those loser loops, and you will not like how you trade. You will not like how you make decisions. You will not like the amount of profit that is coming onto your portfolio, because it won't be a lot, right? I'm just going to be simple and as blunt and as honest as it is. But as far as entries and exits for XAU USD and for ETH, that will be called. Personally, probably not going to trade ETH until we get into that 2-day fair value gap like I've been talking about with Bitcoin for the monthly equal lows. But until that happens, I'll remain patient. Again, thanks everybody who had popped out. The fact that you are here, and I say this every single time, already puts you in the mindset above that 90% who won't even sit through a 20-minute video, right? But how are you going to be able to hold for your take profits if you don't have that discipline? So the fact that you guys had the discipline to sit down here today to try to learn something, and if you can now take this and go apply it to the charts, you can go back and back test, go figure out how these plays come into play, then you will obtain that knowledge much quicker than those around you who are trying to just find the next best thing, right? Because now you have your system. Now you're going to constantly look for the same thing over and over again. And if it isn't given to you, you can say no. You can walk away from the chart instead of trying to be there all day, addicted to the chart, trying to find whatever you can, right, to profit off of. So again, thanks everybody who had popped out. Thanks for you guys for being here. This was recorded. It will be posted to YouTube after. If you guys had any questions or anything like that that I wasn't able to get to, or you didn't ask it now and you just want to ask me either one-on-one or later, you can in DMs, or just go ahead and at me in chat, wherever you guys feel like. But I hope you guys have a great rest of your day and or night, and I will hope to see you all soon. Tomorrow we have our institutional analysis, so we'll be looking at all setups for the week, direction for the week. I usually look for Tuesday through Thursday as far as entries. I usually wait for the Monday liquidity raid, and then I don't really like Fridays as well. But those are my personal thoughts. Thanks again to everybody, and I will see you all tomorrow. Peace out, y'all.